Oh, I thought you... This Special Economic Service, SES, meeting conducted by the Committee on Appropriations Adjudication will not come to order. Notice of this meeting was disseminated to all local media outlets via electronic format on Wednesday, January 24th, with a second notice on Monday, the 29th. Notice of the meeting was also made known on the Guam Legislature's website. I want to thank all of my colleagues here, as well as all the statutory members of the SES for your presence here today. Over the past several years, the financial condition of the government has always been a debate on whether or not the government is doing well. As some claim, but this is the first time in many years where we can all agree, both the legislative and executive branches, that the financial future of the government of Guam and the services to the people of Guam rely upon are tangibly threatened. I call the SES together specifically because of the enactment of Public Law 115-95, the Tax Cuts and Jobs Act of 2017, and its devastating impact on the government of Guam's ability to operate at its current level. I want to be able to see what the executive branch is seeing when it comes to the impacts of this federal tax reform in our revenue base and what its executive actions are for the remainder of the fiscal year. This federal legislation now forces the entire government to rethink how it spends money, but it also requires us to review how the government collects money from its citizens to ensure that the essential services and that the government provides daily are not critically impacted. I have stated publicly that any attempt to solely tax our way out of these expected revenue shortfalls is not acceptable to the people of Guam. I am understanding of the fact that it would be extremely difficult for the government in a matter of just 8 months to cut $47 million without compromising essential government operations and services. There have been numerous ideas presented to the Guam Legislature by Governor Calvo attempting to increase revenues received for differing purposes, namely the Guam Memorial Hospital, and for the revenue shortfalls due to lower than expected collections and the Tax Cuts and Jobs Act of 2017. And just last week, the Bureau of Budget and Management Research issued a circular to all agencies that they plan to reduce government spending over the next 8 months by $47 million. Before we begin with this agenda, I want to reiterate that Guam law created SES to accomplish 3 things. 1, develop recommendations on economic policy. 2, provide technical assistance to the Office of Finance and Budget. And 3, share information relative to the state of the economy. I look forward to the executive branch sharing their plans with the SES members about how it will deal with the impact of the Tax Cuts and Jobs Act. Let's begin with the first part of our agenda, with the Department of Revenue Taxation providing a summary of the tax policy changes in the Tax Cuts and Jobs Act.
Mr. Chairman, may I make an inquiry, please? The agenda that we have before us doesn't include any input from the Office of Finance and Budget. And the governor had written you a letter requesting that when we convene, that we have a dialogue, and that not only are our viewpoints shared, but also we'd like to be able to get you and your committee's input on what it is that we think. So
there will be.
Pardon me?
I've tasked them with several things, and we will get to it. I just wanted to first to know. I mean, we've asked for a bunch of information that we still haven't gotten, so that we can make our own determination. Since December, I've written to John and Marie and asked them to please provide me with the breakdown so that we can try to figure out the impact of the Tax Trump Act. Mm-hmm. I've still not gotten a response so that we can do that calculation. You guys obviously have done some calculation because you've announced a $47 million cut. And so all now, if I just want to know how you guys got to that. And then we will talk about things that I've tasked them to do that we could do. But without the information that I asked for, or the breakdown, all I can use is what I found on the website for U.S. taxes. Yes. And we've been able to do that calculation, but how you arrived at the 47 million and what you guys are planning on doing, I wanted to hear from you specifically. And then we will offer some of the other things that we are looking at and whether or not you guys are amenable to any of those. But first we need to know where the 747 came from.
Okay.
My ORP keeps telling me, forget 19 right now. Focus on trying to survive these next 8 months.
Agreed.
And so if we can figure out where that came from and what plans we have to try to address those 8 months, and then we can talk about some of the other things that we can do. But the information is really with you guys, so if you could enlighten us, John. And I purposely read the purposes for which SES was established, and that was for all of you to assist us, OFB, in trying to get the information, and then for us together to plan the tax policy. But I need that information and the help from you guys first.
Okay. In the interest of the public, I would like to make it abundantly clear that this act was passed on December 29th. That meant that it was passed on December 30th here on Guam. The IRS did not release the new tax tables until January 12th. So there wasn't really any information prior to January 12th that we were able to discern, to be able, as you stated, Mr. Speaker, to even begin to understand what it was that the impact could be. So just for the record, there really wasn't anything that anybody could do until after the 12th.
Oh, I too, Mr. Speaker, we independently did our own calculation, not having other information, just kind of like what we thought of it. And surprisingly, our number was just $1 million off. But it is on the high side because the one assumption, and I had discussions with Lester about his calculation, and I say that number is on the high side because it assumes that all corporations are December 31st corporations. What I was not able to adjust the number by is what percentage are not 1231, because it's the 1231 corporations that are going to be able to take the full effect. But it will be in 2019 that the rest of them will have the full effect. So while the number is high, I think it's within realm of reason. Okay, and we can show you our independent calculations. You and I worked on that, and so I was really surprised. And Lester and I did have a long discussion about it. Yeah.
So if you want to start, or you guys, I'll let you.
I'd like to defer to Mr. Jason Baza. He's a budget analyst, and he actually did the calculation after we, as a fiscal team, met. So it's easier for him to walk you through this than it is for me, to be quite honest with you.
Yeah, let him go. Let's see.
Good afternoon, Jason Baza, BBMR. So to come up with the calculation, when we looked on the IRS website and saw the tax categories for individual reductions, the average was about 1.9 less, so to be a little bit more conservative, since most of the brackets were reducing it by 3, we assumed a 3% reduction on both individual and withholding taxes. So to get our estimate for FY18, we took the adopted level for 18 for both, or actually all 3 categories. Individual at 78.3 million, we did a 3% reduction from that number, which came up to a 2.3 million full year impact. Prorated over 8 months, That came out to a $1.5 million reduction for individual. Same concept for withholding, the 281 million adopted level, reduced by 3% over a full fiscal year, came out to 8.4, prorated for 8 months of that number would be $5.6 million reduction. Corporate was the easiest to actually calculate because it went from 35% to 21%. So we took the taxable income that the adopted level of 152.6 would yield, and which would be dividing the 152.6 by 35% at the current corporate level to come with a taxable income of 436 million. And we multiplied that taxable income of 436 million by the new rate of 21%, which yielded a full year impact of 61 million, or a prorated rate for 8 months of 40.6. So the amounts of 1.5, 5.6, and 40.6 between the three categories came out to the 47.8 million.
And if memory serves me right, John, were there other parts of the
Yes.
Trump tax that,
Yes,
that
yeah.
could increase that number?
Yeah, just
There's the additional
Yes.
income tax, child tax credits, there's all kinds of other stuff. So maybe if you can walk us through some of those others.
Well, some of the major changes basically is what they mentioned basically is that the rates. I think they kept the 7-tier rate, but they reduced some of the rates down. Some are, I think, 2-3%. And that's how we agreed to use a 3% rate reduction on what was adopted. For the corporate, basically, it's a one-time rate. It's for life. It's 21%. And then they did the calculation, and when we compared that calculation with how we arrived at, in the previous amounts that we were giving out, it was very close. In other words, their taxable income is very close to our taxable incomes, the way we estimated it. So that basically is something that we confer with and accepted that return, that estimation. There are others basically that will come later on, which is one of some of the things that are out there is the additional child tax credit. Of course, it went up from 1,000 to 2,000, and also there's a family tax credit also that it's allowed basically. So those are the other benefits that come into play later on.
We won't have to worry about that this fiscal year?
No.
Okay. Those were the things that I wanted to
Yes.
have clear, that
Yeah.
the additional exemptions and the tax credits would or would not be applicable this fiscal year, and so we wouldn't have to worry about it. And we could then understand this as a really fairly good ballpark figure, especially since your figures were
Yes.
pretty close. And
One other number that we didn't factor, and I just didn't know how to do it because I wasn't quite as familiar, is Section 30, because Section 30 is income tax withholding of military and all federal employees. So the same rationale probably needs to be applied to Section 30. But that's where I said I offset it against the fact that the corporate taxes is not going to be completely because of the proration of the calendar year versus fiscal year.
so would
tax.
that should just be the 3% of the Section 30, so it would be 3% of the 78, and taken into account the 8-month?
Yeah, we could use the Section 30 projected level and do the 3% reduction to that to come out with an additional impact to the 47 if we were to factor that in as well.
Yeah, because we anticipated that, and it took into account an additional amount.
But that's where I said the corporation is high because it assumes a full year. It assumes that every corporation is a calendar year, when in fact it's not. But what percentage, and that could give us the cushion, that if it's less than 47, good. But I don't expect it to be higher than that.
The other thing to remember with respect to Section 30 is the diligent effort that Rev. Tax continues to focus on in ascertaining eligible individuals that were not covered over under Section 30. So there is a continual effort to identify and to reconcile with IRS and Treasury so that Guam is compensated fairly, and that needs to be taken into consideration as well. I'm not really sure just yet about taking 3% off of 78 million, simply because they still have some work ahead of them.
It would at least give us, even if it's a smaller number, just something that we could work with for this year. But
Yeah, it wouldn't.
For 19, we'd have a whole different other issue. But
Correct.
and wondering whether or not, if the reduction for this year would mean, would we have to repay some money at the end of the year to, would that be considered an overpayment for, since Section 30 is for this fiscal year, paid in advance, if that was reduced, would we have to then have to repay that at the end?
I believe the reconciliation happens like at least 2 years before we actually get the actual amount. So, you know, like for example, we requested for the 78 for FY18. I don't think we're going to get any reconciliation done until another 2 years, which would be FY20. So it's going to be very hard to anticipate that decrease, or who knows, maybe it might be increased. We don't know when we do the advance.
Okay. Was there anything else that you wanted to add as to the Job Tax Act?
No, that's basically it. Yeah, that's basically it. Unless there's any other questions or.
Just related to the estimate, we were wondering, with all the changes in individual and business taxes, you know, there's the change to the standard deduction, change to the personal exemptions. Was there like a review or analysis of how each of those types of things would impact using Guam data? Because I know that Congressional Budget Office, we used their data. We took a different method. We came out within range, but we can't really rely on the federal data to be somewhat similar to Guam if we just if we localized it. So we came up with a somewhat within range using CBO data, the effects of each of the types of tax reform policy changes, and then we just kind of applied that to the income tax rate. So I was wondering if that's why we were asking for the data, so we can take a look at each one, at least as much as we can, like what would the negative effect using the standard deduction change, the negative effect using with the repeal of the personal exemption, because when we're looking at individual income tax impacts with the 20% reduction in pass-through income, we don't know how much that would impact Guam specifically. So if that's something that we can get maybe for FY19, we can start looking forward to see how that would be impacted. That's why he was asking, and we were asking for the individual income tax data. We can get a very precise thing for next year, so it'll be fully impacted.
Yeah, you're talking about for FY19 then. Yes, yeah, we can look at that, and I think Lester already has some, I guess, to talk about the FY19. So when we get there.
I guess the next question is to you. How are we doing with the expenditures? How are we going to be addressing it then?
With respect to the rest of the fiscal year, well, as you know, BBMR sent out a circular which asks each department and agency to look within to best identify how to absorb some of the cuts that are out there. On the DOA side, you know, we have to be worried about the cash situation, because even though they're working off an annual appropriation, as we all know, we use the cash that comes in on a monthly basis, and we're going to see that reduction starting in February. It's going to get worse in September. I know we talked about the 3% reduction on Section 30, but we're actually planning for the 10 million reduction that could come to pass if they take the 10 million for war reparations. So that 68 threshold is what we're working off that we'll have available in September to make payments. And so we've adjusted, what? Oh.
That's, we've been fighting over that one.
Too much? Huh? 78 is what we received, right? But that's why I'm saying it's 70, off of a budget year, right? You get the money in September for fiscal year 18. So we expect the 68 to come in September at a minimum, and that's the cash we have to work with. Not budget, cash.
It could be more.
It could be more, but cash-wise, we have to
We won't
conserve it.
relitigate that now. But go ahead. So how are we doing? I know that I sat in on an oversight hearing yesterday where one of the departments said they couldn't afford any belt tightening. So how are you guys dealing with some of those departments?
I think that was more related to the budget side, right? Because we only come in after the authorization is provided through BBMR, and then they do the expenditures, and then we pay on whatever expenditures have happened. But the control on the budget side happens at BBMR's side.
Very shortly, BBMR will be issuing another circular that will address the necessary reductions in spending across the board. We did solicit input, and we got 75–80% of the responses. We did not get a response from the legislature. I got a verbal response from the OPA during our lengthy conversation. We didn't get anything from the judiciary, and I think there was one more large entity that did not provide a response to our circular. So we are going to take a variety of cost-cutting measures that will align themselves with availability of cash, as well as offering for this body's consideration a way to kind of ease the pain a little bit. Because, Mr. Speaker, your opening statements are reflective of government providing basic necessities and services to the people that we serve. And this body passed a budget in September of last year, reflective of what you believed were the necessary spending levels for this government. So we may not have had an agreement with respect to how the budget came out, but there was a majority decision, and we accept what it was and what it is that we have to operate the government this year. And as you said again in your opening statement, the tax cut is going to impair that ability drastically. So it was only incumbent upon us to take the budget numbers, accept those as a base for going forward, working with DOA to be able to get people to understand we can't hide from this anymore. I think we were all wishing it wasn't going to happen, but it did. So we just have to learn to live within our means. But I think in some cases, like yesterday was a good example. The Department of Corrections, we were here last summer when they were asking for additional funding. They got a funding level that was, when you cut the pie up, you can only cut it into so many pieces, and it is what it is. But I think Director Lamarena did an admirable job of being able to say that when he provided his budget allotment, he wanted to take and make sure operations were covered because of the safety of his employees and given the conditions under which they work. There really was a prioritization in his request for personnel. It was BBMR who said you have to allocate something for the clinic and the services that the GMH provides. So we put aside $650,000 in contractual for the operation of the clinic. And as we all know, the Department of Corrections just came out of a consent decree situation. The last thing that we want is to be in a situation where we're not providing the basic medical services that the Department of Justice required us to do, and that we're not funding the Department of Corrections at a level for them to be in compliance with the Department of Justice expectations. So, you know, there really is. I mean, public safety is going to be a hassle. It really is. We're not. The input that we got from GPD is there won't be any ability to fund a new cycle. Same thing with fire. I mean, we're just getting the fire people on board now, but we're going to take a really, really big hit in the areas of public safety. Right now, you had a lengthy public hearing on the hospital. It was made clear, and I think everybody acknowledges that there's a funding issue that needs to get addressed. But right now, unless we do something, there isn't anything to be able to give when we all have to collectively absorb $48 million. So try as we might, and with the cash allotments being reduced to be able to meet, you know, basic needs, there really isn't anything past that, like hiring freeze and operational controls, you know, that we can enter into unless we decide as a policy here to rethink what our revenue base is, because we took it in the shorts and it wasn't anything we did. So I see many senators that took the time to be here today. This is not a situation where we have, as Mr. Speaker had again reiterated in his opening remarks, you know, we have made several attempts to be able to, you know, look at our revenue base. It may have been hospital-driven, but I think now we have a situation where it's basic governmental services will need to, you know, we will really need to reassess how we collect our revenues for the services that the people not only deserve but expect. So I hope that from a policy standpoint, we can all agree that there just needs to be some adjustments to replace what was gone. Next year, we estimate $66 million. $66 million on top of the agreed upon funding needs of the Guam Memorial Hospital might take that up to $100 million. Where are we going to get $100 million? We're not going to get it from Uncle Sam. We're not going to get it from Section 30. We have a populace to serve, and you know, the whole tenet of taxation is basically a compulsory, requirement of the populace to be able to, provide to the government to give us and them good roads, good medical attention, prompt income tax refunds. So, we're in a dire strait right now. So,
I appreciate that, and I'm just wondering, besides telling everybody that their cash is going to be reduced, is there any? I know every time I look at the CRER and I look at that little thing about the fiscal realignment plan, is there any talk about doing that, or is the executive saying the only thing that we can do or we're recommending is just redo the revenue base, which in normal parlance is increased taxes?
Our position is that we really do want to work with you. We don't have the exclusive on good ideas. We really don't. There was somebody who testified at the hearing for GMH, and he's talking about throwing spaghetti against the wall. You know, it's been true. We've been throwing a lot of spaghetti, and nothing seemed to stick around here. But, you know, there really does need to be a realization that there needs to be some kind of give on that position. We can only do what we can do, and that means, you know, DOA in concert with BBMR, we're going to be the bad guys, and it's not fair. It's not fair that this windfall to the employee of getting an additional 3% that was ordinarily withheld put back in their paycheck. That's economic stimulus. But, you know, if we're going to be cutting personnel, if we're going to be cutting hours, we're not going to be realizing that 3% windfall. We're not going to be contributing that extra disposable income into the economy. It's lost on us. It would be just a travesty and a true degradation of our economy if what we did wasn't in any way related to understanding that everybody at this table is supposed to get 3% more from what was normally withheld in withholding taxes. That is the backbone of the economic stimulus for an individual. Next year, when ACTC doubles and you're doing your taxes and you're able to maybe get a better return, then, you know, hey, you know, that's next year. But right here, we would. How many government employees are there? How many thousands of government employees? None. I mean, we're talking about a significant cut and a lack of being able to, at a time where we really do need, you know, economic activity, not being able to contribute because we don't have the money. We got our hours cut. We got our pay cut because it's really going to come down to it. The only thing to cut is personnel, and that would be a travesty. You know, so much for the economic stimulus, so much for the Jobs Act. What job? You won't have a job. You know, you won't be able to pay your bills. You know, it's contrary to everything. And you know, again, we were probably an afterthought in the whole scheme of the federal government side. But it is what it is, and we got to come to grips with it.
So that we're talking now. Let me see. I really do understand that because I've instructed them about looking at every single one of the different taxes. Mm-hmm. So we have breakdowns on how that, and we'll bring that up later. But I just wanted to hear from Gita if there was going to be any impact with the Jobs Act on our current bonds and bond ability.
We did receive one inquiry from the rating agency on the impact, and you know, we've reported what's coming out of the administration today. Normally there will not be any negative credit ratings unless they see continual downturn in the economy. But we've always countered with, besides the downgrades, there's other positive news and going on, and so they're waiting and watching to see what's happening here, long run, as opposed to just what's happening today. I mean, the thing is, it's happening all over the state, so they're just watching us to see what our reaction will be to the expected downturn in revenues.
I might add also for fiscal 19, there's going to be an upward adjustment in debt service. The Section 30 bond payment went up. So we have that obligation and an increased debt service amount that we have to take into consideration. The other thing that we were just made aware of is that the retirement fund is looking at $2 million plus additional requirement for retiree medical dental life premiums. That's what they're forecasting. So on top of everything else that we have about $5.5 million less to split out because we have increased debt service and some indication that all things being equal, and the public auditor and I had this discussion about health care. But all things being equal, they expect that there'll be an upward adjustment in healthcare cost requirements. We, as a group, and I thank you for the amounts that were upped to be able to take care of the retiree medical dental life, because for a couple of years we've kind of turned a blind eye to what it was that the real costs were. We've made, as a group, a very conscious decision to up the amounts that are required to be more in line with what it is that the costs are. But I think there are, I think the public auditor and I spoke for about 2 minutes about, you know, our numbers and how they aligned pretty closely. The next 45 minutes were spent on a variety of different initiatives that, you know, we collectively should discuss to be able to right-size the cost of government. And she has some very good ideas, and they're ideas that, again, hopefully aren't like uncooked spaghetti, and at least a little bit of it sticks on the wall around here. And you know, there are things that we can do, and I think that it's going to be a very good. I'm hoping that this process and this working group, you know, meets on a more regular basis, so that we can come to a decision very soon about how we might be able to effectuate, you know, some of the ways to replace some of the lost revenue, or if there's no action, then there's going to be a reaction, and it's not going to be pretty. I think John Fernandez summed it up nice. I can cut $20 million off my budget, but are you going to like what it is that it's going to result in? And I don't think that any of us here are in a position to want to see consolidated schools, less of a ability for this government to provide education in an environment conducive to learning, that parents are used to, that you know, regime that you get up in the morning and you do this and you do that and you take your kids. Well, now I got to take my kid to a different school. Now I got to get up at a different time, and now she's with you know, 40 kids in a classroom. I don't think that's what we want. So,
Are there any proposed cuts that I mean, one piece of spaghetti that I kept trying to throw up against the wall, and I'll admit that I may have been the beginning of it, but a savings on, as you mentioned, the health insurance, and going sole source, I mean not sole source, but sole provider, as opposed to choice, you know, and whether or not with that savings, or do we just?
Well, health insurance is one of the things that we certainly took a look at. We spend over $100 million a year on health insurance costs. Of course, that's broken up by 3 different providers right now. But the bulk of where that cost comes from is the government's share on health insurance. And so one of the proposals thrown out is to change the requirements of what employees have to contribute. But that's something that we could not effectuate this fiscal year because we are in the current contract. And so any changes to the health insurance and the amounts that the government or the employee or retiree would have to put in is something that would apply to next fiscal year. But it's certainly an option to take a look at in as far as saving the government money. There is the choice of going to a single provider. I think if that's the choice that we want to pursue, we also have to take a look at the benefits that we provide. One of the consistent themes that come up in the health insurance negotiations is that the gym benefit is a very costly benefit and raises premiums. And so it's something that we've talked about eliminating, but it was something that was recently added and seems to be a benefit that a lot of people have advocated for. And so all of those things need to be put back in the table. If we really want to reduce health insurance costs, we need to look at that core program, or that core benefits that we're providing, and perhaps scale it down so that it becomes more affordable. And changing the requirements of the employee contribution, one of the things that we talked about is that they might decide to go with a cheaper plan. So maybe they're not going to get the $1,500, they're going to get the $2,000. Maybe those that are qualified would go to the RSP plan instead of staying in the 1,500 or the 2,000. So those are just some options, but I mean, it's a quick, by our calculations, if we even split the cost 50-50, we would look at saving the government $25 million just on health insurance costs. But of course, the biggest group that would probably be affected because we pay more are on the retiree side. So that's something that was not a...
If I could and add to that conversation, because we were just talking about that. We finally got some of the data to your request to look at health insurance, and my eyes just bugged out. I mean, I was really taken aback about how much GovGuam has been paying for health insurance. It's a number that is hidden. It's wrapped up in the benefits, and it's a cost that has been going up tremendously that no one has been fully aware of. And let me just give you the preliminary numbers, okay? And we went back and forth, you know, the $25 million that she's assuming, that she's calculated, assumes a 50-50 split. Let me just give you some of the numbers. In 2014, we paid $54.4 million, the government's share on health insurance. In 2015, that went up by $10 million to $64.2 million. In 2016, that number is $72.9 million. GovGuam pays, that's only the government's share. The government's share of the total cost of health insurance is 85%, compared to 15% for the employee. That is dramatically different from dental insurance. Dental insurance, and approximately less than 2,000 people elected not to take dental insurance, okay? The government's share is 40% compared to the employee's share is 60%. Now, what has happened here is the pool. The mere fact that retirees are segregated, GovGuam pays a disproportionately higher share of health insurance. For active employees, it's around 3,300 or so. GovGuam pays 3 times that for a retiree. There's fewer retirees. What I advocated when I spoke to Christine as well as the governor is make this one pool. Don't differentiate between retiree and active. One pool. That way you spread the risk of high-risk employees over low-risk employees, okay? By doing that, then you even out the cost, whether it's a retiree or a GovGuam employee, okay? Then once you do that, because of the other legislation, not a retiree cannot pay more than an active, then we might want to consider raising slightly, maybe over time, from 15% maybe to 25%. And the following year, you know, don't shock us with a full 50-50 or a 40-60, but a gradual. But first of all, we need to look at the pool. The pool needs to be one pool, because a pool of just 2,200, 3,000 retirees is not a big pool, you know. It's a small pool. It has to be a pool that has, that's what a pool is for, high risk and low risk, so the high risk is spread over the low risk. By separating it, that's why GovGuam is paying so much more. You know, we are, and the pool itself is not that big compared to the federal government's pool. That's, you know, so that was just, you know, just in context.
Is that statutory?
Yes.
That the
No, the statutory on the split, I understand that there was that one special provision that retirees don't pay more, but aren't the splits determined by the administration?
Well,
and that's not statutory, the splits.
we could change the splits going forward, but just
But that's not going to require legislation, will it?
the which one? Not the splits, yeah. We've kind of maintained the same splits, at least from my staff's reports for as long as they could remember. And basically what that is, so for a subscriber, a single active employee, the total premium for that person is $48. So that's what the government share is. Well, basically we charge the employee 10 cents, but it's very minimal as compared to, for example, the single employee active under the 1500 plan, which is 153. So I want to kind of give you that comparison, because if we do one pool and we split, you're talking about employees that are used to paying a very small amount for a very small premium. A retiree's premium on the 2000 is $155.50 for just one person, as compared to the 1500, which is $497. So if you're talking about a combined pool, you're talking about the $497 plus the $155 split in half. So the active would have to take on a bigger share, and that's what she was saying. It would be spread out, but just recognizing that you're really going to put it on the backs of the active.
But let me also just add, because I just came from the chamber and I think Senator Lee was also there. One of the things overall, Guam as a community pays a much smaller portion of total health insurance compared to the states. Overall, a single individual pays, the number he used was slightly over $2,000, just under $3,000, whereas a family household pays around $7,000. Guam, you know, the government does not pay, let me rephrase, the employee, whether it be active or, does not pay anywhere near that amount. So this is where we have to think differently. What was the benefit? You know, every benefit is going to have a constituency. Every benefit is going to have a constituency. We must think of something that is going to be fair, that will not disrupt our economic base, that is equitable. But everyone has to now contribute to the pain that we are all going to suffer if we do nothing, if we just do everything the way it is. You know, we are at a crossroads, Senator. You all know this, and I want to thank you for having this meeting. But this should be, as Lester said, a series of meetings. And I left the chamber before talking to them because I was really very disappointed initially in hearing, we don't want this, we don't want that, we don't want this. Then finally at the end, some of the senators speak, we need to offer solutions. And the same senator came out and said, we need to raise gross receipts tax because that's going to be an immediate infusion. But it needs to also be anything we do when it comes to revenue needs to be sunsetted until we get better economic data. And let me just say this, you know, I was drooling when I was reading Governor Cuomo's comments about his high communities like New York City versus his low communities like in Upper New York, because they have the economic data to be able to know which county is going to be affected, who's going to lose out by the capping of state income tax, those kinds, and who doesn't need it. You know, like going back to the standard deduction. The reason I saw that that was a wash is because yes, the standard deduction has been raised, but it's going to be offset by taking away the personal exemption, so the net amount is negligible. Okay, but what I wanted to say is, DOT has been asking for mandatory electronic filing of all tax information. We just were there yesterday to start our audit on the gaming tax because we're looking for revenues. Why is gaming tax declining when all those gaming areas, you know, they're behind 1 year in posting the 3260s. What I say here is, require mandatory filing, electronic filing of all tax information. That way we know by sector where is our decline, where is our increase. That way that information can be given to us sooner. That way you, as policymakers, can have more viable real-time data, not data that's 2 years old. You know, we should know how many people, how many companies are not fiscal year, not calendar year, excuse me, and having calculate that, and then we could literally calculate more precisely, but we're just taking total wholes and just applying a formula that we think is reasonable. By having mandatory filing, okay, and they have asked that constantly. Again, it's not going to help us today. It's not going to help us today, but it's going to help us tomorrow. In the shorter term, it will help us and help you. So,
okay, I get that, and so we need to, yeah, I just want to get back to one question. This is the end of the month of January. Is there any legislation that you want to recommend that we do in the next 2 months before you send out the RFP for the health insurance for this next year to see whether or not we can get this 25 million or some?
Peanut gallery speaker. That's my brother.
And the question is, can we afford to continue to pay, because that's FY 2016. The number is going to be higher already in 2017 and even higher in 2018. Can we afford this to continue the way we're negotiating now? I say we cannot.
I understand.
Yeah.
Tomorrow's February the 1st. What legislation do we need to address that one issue almost immediately?
Well, the first legislation is the requirement that a retiree cannot pay any more than an active. I mean, depending, again, it's got to be a policy call by the legislature. If that is something that you want to do, if we're going to continue to split the premiums so that the actives are not subsidizing basically the retiree premiums, that's another thing that we kind it's reversed in as far as the claims, but as far as the premiums, if we start combining the premiums for both the active and the retirees, the ones that are going to take the biggest hit are the active employees. They're going to have to pay more when right now they're paying like 10 cents, you know, and so that's the point, is like, you know, it's going to affect the employees and it could affect the retirees, and so what policy call are we going to make to be able to save this money?
But you can't expect a retiree who was paying minimal to bear a higher burden. This is where I said one pool, you know, and it's spread out evenly. What we haven't yet looked at, and we haven't yet gotten the data, is where are the claims coming from? Okay, you know, the ratio of premiums paid to claims paid. You know, we have not yet gotten that information.
That's received on at least a quarterly basis, aren't they?
Audited.
We haven't gotten it to be able to do our own analysis. What we did get finally was the cost of health.
Is the autonomous agency separate on the pool?
No.
Yes, it's the same way, but they pay into it. They pay directly.
So the 100 million includes the autonomous agencies. The only one that is not part of our pool is judiciary active. So we still have the retirees, but we do not have the active employees as part of our pool.
And again, that's another area
but if we're talking about
the entire pool,
then it should be everybody. It shouldn't be just a little bit here, a little bit there. We're all part of one government anyway, so it doesn't matter. Everybody, even judiciary.
all for one and one for all.
So that could be another consideration for the legislature if you want to pull everybody back together and not allow them to bifurcate from the overall policy. We have had requests, as our member Mike Carlson knows, co-chairperson, from other autonomous agencies to break off, and yes, and we've not gone down that road yet, but it could be a possibility. And so in order to bring the premiums down, obviously economy of scales, right? The more people in the pool, the lower the premium's going to be. So it certainly should be a consideration for this body.
Thank you, Mr.
And again,
Speaker.
I would urge one pool, because you cannot put this on the backs of the retirees.
Okay, so I just want to reiterate the Speaker's call on what is needed, right, legislatively, to for the next fiscal year's RFP before it goes out. What is needed to do some of these cost cutting, some of these controls, and it really goes down to Madam Auditor about what you're saying about the cost of health insurance. And to my point exactly, we've been trying to say one of the ways we can bring in revenue is to assess some sort of fee to these insurance companies. This is a $250 million industry. 2016, the report we got from the insurance commissioner was about a $30 million cumulative gross profit. And for them to be here a few nights ago and saying, we know the hospital needs help, but not from us, is something that we here are going to have to make that decision and make that call on, because that's $10 million a year that we could be able to collect if it's just a 4% fee that's assessed to them. So that's one. The other one I know that the call has been to mandate an electronic filing of BPT. Twice we've introduced it on behalf of Revenue Tax, the past legislature and this legislature. We're going to try again. It didn't go anywhere. We're going to try to move it through. But I understand, because we do need that data. OFB needs accurate data to be able for us to come up with the budget. But all of these things are things that could happen for tomorrow, where we need something for today. And so one of the questions I want to ask is, I know this reduction in revenue from the federal tax law now is going to happen today. What could we do now to buy us some time? One of the suggestions was raise taxes today, but it doesn't happen that way. Is there a way that there's been discussion of perhaps delinking? And I know how hard that is, because of the different tables that we would use versus what other companies who are US based would use. And it's a nightmare. I understand that. However, is that an option for us to be able to take a look at to buy us some time? We talked about if we raise taxes, there's a sunset provision. Well, if we delink, do we have that period of time that we say we're not going to be part of the system now and give us some time? So that's one question. The other question is, the Organic Act provides us the authority to assess a 10% surcharge. Is that something that's been looked at? And what if that is instituted? I don't know, number one, how it's done, but if that's instituted, what is that impact to that $44 or $47 million? So those two questions.
Senator, if I may, and Senator Lee heard them, where I came disappointed from the chamber was no to everything, including the insurance, the banking, the wholesalers. Okay. Finally, Simon Sanchez came out with the raised gross receipt by 1% to 5%, and sunset it while we can get a better handle. The thing that he said, and I haven't had a chance to pursue that with the rest of the chamber, is this has to be a continuous dialogue. We need to meet more, have more round tables to invite the chamber. Ask the chamber for what is your plan? This is what we're faced. What do you offer? What I got was we're all in this together. This is our community. We have to help our community. We can't not just say no to the tax increases. Some form of tax increase is going to be inevitable. What form it is, I do not know. But some form of of expenditure reduction also has to happen, okay? No matter what, we can offer you a menu of options, a buffet, but everything is going to be malai. Everything is going to be bitter, everything, no matter what, because every benefit, every exemption has a beneficiary. And the thing is, they were asking, where is the low-hanging fruit? Where is the low-hanging fruit? So this is just the beginning of the discussion, but we have to put a timeline within a month or so, because we have to take immediate action somehow. Otherwise, Gov Guam will fall off the economic cliff, because we know that the revenue decline is a certainty. The revenue decline is a certainty. What we don't know is if we are status quo, we will fall off the cliff. Okay, so it has to be a combination. What form, I do not know. But the options for 2018 are actually very limited. We are stuck in contracts like the health insurance. We're stuck in lease areas. We are stuck there. The options are very low. You know, I just anecdotally on the elevator asked a lawyer in the building, I said, what would you do? What would you have Gov Guam do? He said, cut, cut, cut. You know, reduce payroll, reduce. And I just raised my eyebrows. You know, I should have said, where? Who do you want me to cut? You know, which personnel do you want to cut? That's the obvious knee-jerk reaction. That's a knee-jerk reaction. We need to help educate the public, bring the business community in. You know, there is this area where Gov Guam is fat. Okay, tell us where the fat is. Tell us where the fat is. We need to have that dialogue, you know, tomorrow, next week, on a regular basis. Ask them for their solutions. There was one solution, but it's a long-term solution. You know, I don't know how viable it is, but the COFA citizens, instead of having them come to GMH, have them go to the Naval Hospital. That requires federal intervention in order to do that. You know, again, but these are our laundry list of things that we can begin to identify. What is and has to be an immediate solution? What is a short-term solution? What is a mid-term solution? What is a longer-term solution? Again, the sales tax versus the gross receipts tax. You know, all of these, we need to begin to have really very viable. Is it viable or not? Someone threw out internet sales. You know, again, that's an area that we've not taxed. And if it's about 4.5% of internet sales, you know, I don't have the mathematical economic information to figure out how much we could gain from internet sales tax, you know, for things purchased. But at least it's an area that wasn't taxed before. So let this be the beginning of a continuous dialogue until now we have to make a decision. But whatever decision, mala'i. Whatever decision it is, it's going to be mala'i. So, and we have to know that. And the people, we have to begin to educate the people of Guam. Who do you want us to cut?
I think we've made it abundantly clear that the basic services that are required and expected from the populace here requires some revenue enhancements. As the public auditor said, as bitter as that pill may be to swallow, all of this discussion about a pool, all this discussion about a tax surcharge, it's all well and good if you got a job. If you don't have a job, you don't have insurance. You don't have a job, you're not paying taxes. You're not going to get a surcharge. We need to continue to have a employment level of the government of Guam consistent with the services that people want. And if we start looking at cutting, okay, well, you guys made a bold decision, and I applaud that. You gave Revenue Tax 30 plus additional employees so that they could process driver's license quicker, augment their tax enforcement, so that they could beat the bushes to get revenue and provide services, so mitigate these long lines for driver's license renewal. Their Revenue Tax response to the budget reduction would be, well, I'm going to not be able to afford those employees because if I have to cut this much money, then so there goes a good idea down the drain. But it was a great idea. I love to tell everybody when we do these investor outreach meetings that Revenue Tax assesses and collects like 98% of the revenue of the government of Guam. So when Christine makes a phone call, I need cash, who does she call? She calls these guys. Beat the bushes. And when you guys augmented their workforce, I was really nodding in approval because you understood what that requirement was and how much of a cost benefit that would provide. But if we can't maintain that level of service and enforcement, a lot of what we're talking about here is just kind of like, again, dry spaghetti ain't going to stick.
Maybe if I could just make one comment, as I saw GVB over there, someone even threw out raising the tourist attraction fund taxes, you know, at the chamber. Someone even threw that out. Mr. Shimazo was very cautious about saying it. He speak on one-on-one, but Simon Sanchez and others said, hey, nothing should be off the table. Yeah.
Well, if that's the case and we're going to look at the special revenue funds, then we need to understand those special revenue funds need to support the basic services in the government of Guam, because that's the challenge. We starve and starve general fund. Yes. We've got these special funds that are healthy, like the Healthy Futures Fund, yet our general fund continues to dwindle. And that is what funds the basic support services that's being provided by our government. There's only so much you can cut before you get to a level where you compromise those services. And that's why, you know, we can discuss cost-cutting measures, but as Lester said, we also need to discuss revenue enhancements so that we can do a balance. It can't be just one with the amount of money that we're looking at.
Okay. Which ones start with, which one do you want us to pass immediately and sunset when?
Which ones do you want to discuss? Because I believe there's been all kinds of discussions on different ways. Like, are you talking on the revenue enhancement or the cost cutting?
The revenue enhancement, then. I mean, you want to talk about revenue enhancement. The suggestions that have come out in the past is the revenue enhancement, the increase in the BBT, GRT, was for the hospital. It's not going to address this.
The BBT, I think if it's 2%.
At the level that the hospital needs, and when you overlay what it is that you need to make up with the loss of revenues because of the tax cut, we had discussed 0.75 before, and that 0.75 would have resulted in about $46 million. It would have provided, you know, the operational shortfall funding that they need, plus money to be able to embark upon their modernization plan. That would be at the minimum amount, because if they were able to leverage the amount over 30 million, then they could realize quicker the modernization that they desperately need. So there's been discussion, I think Simon mentioned 1%. I'm advocating that we actually look at 2%. And the reason why I say 2% is because there's been an exhaustive discussion of the needs of the hospital. But everybody here, I think, agrees that we cannot allow our economy to fall off the cliff, as the public auditor stated. I think that a sunset provision is appropriate, because I think we do need to effectuate a sales tax. I know personally how much online sales occurs at my house. And so we need to capture that revenue. And I think that is a leakage that we can plug. And everybody is, okay, well, you're paying 4% on, you know, what it is that you bought over at, who's it that now can, Target. Because now you can get Target to deliver. Okay, so well, we should be paying the 4%. It's not a big deal. So there really needs to be some consideration. Okay, am I going to put a Band-Aid on this? I'm going to half fund it, or am I going to fully fund it? Are we going to just, you know, man up, get the spaghetti, and make it stick? Swallow that bitter pill, or just kick the can down the road? I suggest to you, we don't kick the can and we make the hard decisions.
Well, and if we're talking, as they said, about the sales tax, I think that's the easiest thing to pass with the less resistance for the internet sales. The only problem with that is we can't quantify at this point what that's going to mean in terms of revenue for the government. And so, as Lester said, I mean, if the GRT is immediate, there's a sunset, it provides the necessary funding, but putting that sales tax on internet sales also gives parity to our local businesses. They have to pay sales tax, or the GRT, and so taxing the off-island purchases gives them that even playing field for the local businesses.
I understand that, and we've had several discussions with John about how that was supposed to be done. I thought you were looking into, I thought it was just a MOU with Amazon and a couple of others to do it.
You know, it would need some amendments to the use tax because the use tax basically, like what Hawaii does basically is as an excise tax, which it imposes also a use tax, but Hawaii law basically doesn't have any exemption. So we need, if we wanted to work with the vendors, we would need to amend and kind of clear those exemptions under the use tax so that when an online sale occurs, it's attached to the gross receipts. We don't have to worry about who is exempted or not. So that's part of the fix that we were looking at.
Have you written down that?
I think we
Do you have that ready to present to us for legislation? We've been talking about this since we were at the old building, and even with the Airbnb. Were all those things factored? And I've been waiting for a report to tell me these are the pieces that, as bitter as these things are going to be, you're going to have to make these amendments. I have not received a white paper on that.
Yeah, we'll work on that, Mr. Speaker. But for the Airbnb, our legal counsel is looking at the MOU right now, so hopefully we can get it going. There's a draft MOU basically that we're looking. So it would actually basically, look at all these basically other than the hotels that are out there, so they can actually collect on the 4% tax.
I just want that clear. One of you, well, you're going to have to, Lester, be the one that rides them to make sure that they get that report back to us so we can do something about that. I mean, it's an excellent idea that you come up with, but I can't make them do anything. I mean, you can barely get them to write back to me. But I mean, if they could just do this and tell us, these are the exemptions that you need amendments that you need to implement. This is the piece of legislation authorizing us to do this, then let's do it. We have a very short period, and I understand that if we do an increase in the BPT, 1 or 2%, that if it's sunsetted in 3 years with a show that these other things are providing, we no longer have to do that, I think it might be less bitter to swallow, to know that these reports are coming out, and if even before the sunset, if enough is being generated there, it can be terminated at an earlier date. That may even be more tolerable to the business community to accept the additional 1 to make it to 2%. And then I can hear from those guys down there as to her suggestion to address the.
It wasn't my suggestion, it was at the Chamber's suggestion. But may I give you another spaghetti to throw on the wall? And our audits have actually spoken about this, and this is on the solid waste. Okay. As you know, remember there was a time when we were receiving $4.5 million from the receiver to help pay for debt service. And then, of course, he took that away so he could expand capital projects. Okay. At the time, we did get some numbers. In fact, the receiver did file to raise commercial rates from $172 a ton to $235 a ton, and residential rates from $30 a ton to $35 a ton to help fund debt service. That's another possibility to consider. But of course, that would probably that filing is dead now. It would have to be resurrected, and then the PUC would need to take action. Yeah.
It's the new GSWA board. And
no, this calculation was done by the current receiver.
Yeah, no, I understand, but the most recently appointed board is going to have to make that presentation to PUC, because solid waste is under PUC, and their increase in rates is PUC not here.
That's right. But again, we're just throwing things out. What other actions can be, because that would relieve the general fund of. No, it went up to 15 million, right? Yeah, it went up. Debt service went up to 14.9 million. Yeah, so, when, at least before we got at least 5 million, now we don't have anything. So rates do have to be increased. But again, subtle persuasion to the board that, hey, we're in a crisis situation. We need to take action. We need to help relieve the general fund.
Did you have?
Like water or power, the other utilities, you just reduce your consumption, right? So you turn off lights and the air conditioners. With solid waste, then you go to the nearest jungle, and that's where you dump, and then we create that problem. So the cutback of that consumption is not as easy as like utilities and other services.
Okay.
But some alternative needs to be considered to help pay for that utility, because eventually when it's transferred to GovGuam, what's going to happen is, because it is a GO bond, okay, GovGuam is going to continue to absorb that cost.
I understand. We have this discussion every summer, trying to figure out what we're going to do about that loss. Did you wish to add something down there? Go ahead, and then we'll get GVB.
Thank you, Mr. Speaker. I do have a little experience in raising taxes and getting spaghetti thrown at you. But, the question was brought up, or the proposal was brought up to the testimony through Senator Sanchez, and I know, Director, you mentioned raising to 2%. Senator Sanchez went on to further to portion it out where that 1% will yield approximately $60 million, $20 million will go to the hospital, and $40 million, the rest will go to offsetting the cuts or offsetting the challenges regarding the Jobs Act. Now, if you raise it 2%, how would you portion that out? Those were the two things that were very specific of how it will be spent or where it will go to offset. 2% is news to me, but the 1% that was thrown out in the recent hearing was, at least at the hearing, didn't seem to have too much of, I'm not sure what was heard at that chamber today, but at least I didn't hear any testimony coming to counter that after that testimony was put on the floor or on the record.
Well, it would seem to me that the 0.75, if we accept the premise that every 0.25 raises about 15 or close, that the first 0.75 would go to the hospital to provide for its revenue shortage, plus give them a small cushion to do a pay-as-you-go, or if they want, they can leverage that additional 15 on a long-term, larger loan for something. But we also have to take into account the fact that GDOE is in dire need of some renovation money, and it would seem to me that the additional 0.25 could be put aside for their pay-as-you-go renovations, and the additional one would provide the 60 loss for this one. So I mean, at least for right now, until we can find out whether or not the online will give us a couple, how much would we get if we redid the insurance, and then my assignment to my OFB staff of what other ones and how much would we raise if we'll have. You wanted to hear from them, so I'll give you a lot.
Just one point of information. $1 million every year from Department of Interior goes to deferred maintenance at the schools. So we get, $6.5 million of CIP money, but by agreement with the federal government. 1 million goes to DOE every year. But, you know, it's insufficient to be able to take care of the deferred maintenance needs and the
And yeah, the 2014 GAO report says they have 96 million, of deferred maintenance that needs to be addressed.
And just another obligation, if and when Simon Sanchez ever gets built, the debt service on $100 million, how are we going to pay for that?
Mr. Speaker, you know, along the lines of the 4% sales tax on internet or internet sales, have you looked at just completely moving, if we're already moving in that direction, to just completely moving? I know it's discussed many times in the past, is completely moving to a sales tax across the board.
If everybody would look on the website, the legislative website, 2 weeks ago I wrote to GIDA and asked them about the sales tax. And I don't know if you want to just read it into the record at this point, because it really has to be addressed. I mean, at the oversight that he conducted initially, or the initial roundtable on the Jobs Act, everybody kept saying sales tax, and so I purposely wrote to GIDA to ask them what, with the bond council and $450 million in bonds, how or if we could do that. So why don't you just read that into the record, so that I know the paper only had one paragraph, but it is more extensive than that.
The question posed was, do the existing bond covenants relative to the government of Guam's business privilege tax permit the permanent repeal and replacement of the existing BPT with an equivalent sales tax? The response: the existing indenture relating to the BPT bonds secured by the BPT would prevent the permanent repeal and replacement of the entire existing BPT with an equivalent sales tax while any of the BPT bonds are deemed to be outstanding under the indenture. Specifically, the BPT indenture provides that, quote, as long as any bonds remain outstanding, the government shall not reduce the rate of levy and collection of the pledged business privilege tax below 3%, nor shall the government reduce the services, products, or activities to which the pledged business privilege tax applies, nor shall the government upwardly adjust any exemptions or exclusions to or otherwise impair the pledged business privilege tax. If the government were to legally defease or otherwise pay off the existing BPT bonds with non-BPT government bonds, it would then be permitted from a BPT indenture standpoint to permanently replace any portion of the BPT, including the pledged 3%, with an equivalent tax. We note that the BPT bonds could be paid off at any time by escrowing them to their respective call dates. However, we would have to use taxable bonds if done prior to calendar year 2025.
But an internet sales tax is different. It's a new tax. Yeah, so, and so now, thank you for that, because I think the chamber was not aware of that and had, you know.
No, we sent it to them yesterday.
Oh, just yesterday. Well,
Yeah.
they didn't use
Well,
it.
yeah, we only got it
Yeah.
on Monday in
Yeah.
time for the hearing that we were having Monday evening, because I knew that everybody kept talking sales tax last week. And so I immediately tasked them. I said, you guys need to address this, and if there is,
Let's just comment of the 2%, I think is going to be a difficult sell. I think the 1% increase to 5% is more likely. I think people are expecting it because they know from, the corporations are going to benefit, and I think that's the way you come back. But again, I would urge that we have this legislature have ongoing roundtable discussions with the chamber and any other organizations like the wholesalers, the Bankers Association, all of them, so that we all come to the table and we all eat this bitter pill together.
But are you saying then increase the BBT by 1% or introducing a sales tax? It's one or the other.
No, it can't be one or the other, Senator, with all due respect. It's got to be a menu of options. We've got to do this, we've got to do that. We have to show to the community we're looking for other areas also, and not just rely strictly on the BBT. Because another tax that was considered was real property tax. We're starting our audit, we're in the middle of our audit there, and two exemptions, the primary home exemption and the senior citizens exemptions. We lose over almost $4 million annually just from that. That's another consideration. So all things, temporarily again sunset that exemption, meaning until we can reevaluate it.
No, the only reason why I asked that question about the 1% on BBT versus having the sales tax, where it's visible for everybody to see exactly what they're paying. Because the GRT, nobody sees exactly what they're paying. But on the sale, if we introduce a sales tax, very clear. Gita presented a letter recommending the 2% and the 4% on internet. And on the night of that hearing of the speaker, it was very clear exactly that it could raise something like about 32 at one point and then an additional $50 million. So it's a high number. And that's why I'm bringing that up, that it's one of the, because I wouldn't support increasing the GRT because that's already locked into the bond. So there was nothing we can do about that one. That's a locked box until 2025. Anything else to save the government and continue providing service I would only recommend a sales tax, nothing else. Because then it's a hidden number again. I just not comfortable with hidden numbers. Then we don't know when until it's lost.
The problem is trying to figure out how that's going to be implemented. You're going to have to change all the cash registers to do that. And so yeah, no, I understand, but the thing is that has to be done.
Sunset is very important. That way, the business community, everybody knows this is a temporary until we look at other ways and have more time, like exploring the health insurance and other areas. We need to come to the regularly to figure out what else can we do.
The thing is that what she read, when we're ready to pay off $451 million next year in the new bond, then we can talk about sales tax.
That's right.
No,
but
but
until you can figure out where you're going to
both.
get $450 million to pay in a new bond, so it and
No, but
try
we
to
don't
convince.
get rid of it. We don't get rid of the existing 4%, so we don't touch that, so we don't bother or we don't interfere with bond covenants. We put the sales tax on top of what's already existing, so it would be a separate tax, but an overall tax on sales. But the BPT would not be touched.
No, I understand, but I'm just saying it would have to be on top of everything else.
Yeah.
And
then are we going to tax groceries? Are we going to tax pharmacy, medical? I mean, see, all those are your typical exemptions. Groceries are not taxed normally. Neither is pharmaceuticals, because that's health and welfare and that's food. So if you take away that, what else can you produce? So again,
and so how much would that raise? And so when you have
I
all
don't
of those
have the numbers to
exemptions-
tell you. We don't have the economic data. Again, this is where this ongoing discussion needs to happen. You know, when we look at gross, you can look at a couple of different industries to kind of get a guesstimate. You know, like how many from the grocery industry.
Just so let me do this. Let me hear from GVB. Then I'll have my OFB staff give you some of the numbers that we've been looking at, because we haven't been just kind of sitting. We've been. GVB on how to address this and any possibility of returning the hot tax back up to the 13%. What happened?
Hello, Alfred. Thank you, Mr. Speaker. I just wanted to add, I spent a lot of time benchmarking ourselves against Hawaii, usually for tourism and marketing, but I know they have a general excise tax, as I thought was brought up. but they allow the general excise tax to either be absorbed by the business at the 4%, or they allow it to be passed on as almost as the same as a sales tax at 4.17% because they tax the amount collected. And I haven't ordered online from Hawaii, but I'm pretty sure when you order Amazon and it goes to Hawaii, they're able to add the 4.17% to that bill, collecting that internet tax. So I just think, for me, my dad always told me the keep it simple, stupid the philosophy. We already have a system in place with the BPT. Basically, if you just allow people to add it on after the fact, like a sales tax, it kind of accomplishes both. And then from a visitor industry, we do market Guam as a duty-free destination, and that's been, tax-free shopping is one of the headlines. So, that would allow, and I'm pretty sure that's probably why Hawaii didn't just move into a sales tax. It would allow them to operate a business, okay, we're tax-free, duty-free, or you're, a Macy's that wants to tack on the sales tax because you don't want to price every item in the store, and then you can do it that way. So just kind of my 2 cents on that idea. I think I sent to Senator Rodriguez the FAQ sheet on the Hawaii site. So for what it's worth, that's an idea.
Speaker, did you inquire on the hot bond? I think that's what he was talking about, the hot bond.
If the
well, no, I'm just chiming in the general discussion about the BPT. As far as the hot bond, I can cover that. The
hot tax.
The hot tax.
The hotel occupancy tax. Going back to the 13, it used to be 13. We temporarily, it was reduced to 11. Now, how about taking it back up to the 13?
GVB is a membership organization made up of my members. So let me kind of speak a little bit. I think as far as tourism, every 5 years or so, we do the tourism satellite account, which is an economic study that measures the impact of tourism. This is Nico, by the way. He's our acting director of research and doing a great job filling in for Anna temporarily. In 2010, tourism was collecting about 150 million in taxes for the government of Guam. This is hot, but all the payroll taxes in totality. This past 2016, based on 2016 numbers, that number is now $260 million to the government. So I think tourism has been doing its part in attributing over 110 million in taxes to the government. As far as the hot, because we've been focusing on diversification, improving the quality of our destination. The hotel room rates have gone up, and so the hot, I think when I started 2011, we were at 20 million. This past year, we're going to be closer to a little bit above 40 million. GVB hasn't gotten all that budget. It's been shared amongst the different agencies. We're funding now the Tumon precinct. We're now funding fire. So I think tourism has been doing its part to help the general fund take off some of that burden by the general fund. So, in fact, and then the hot bond, most of those monies were used outside Tumon. This building here, built with hot bond funds, the museum funded with the hot bond. I think we're also funding Department of Chamorro Affairs, some of the other agencies, Parks and Rec is funded by the hot. So, I think, it's called the Tourist Attraction Fund, and tourism is a community-based industry, and we try to do as much, but I just want to explain, on August 15th, we had the most media coverage Guam has ever had with the North Korea news. And it really, I think we absorbed it as well as we could have because of the diversification, but we're still feeling those effects, especially in Japan. Guam is so popular with Japanese because we're known as a safe destination, but this news directly affected that, probably one of our top 3 branding points besides our close destination and beautiful environment. And so, we're really fighting hard in Japan to keep that market. We got more negative news of the pullback out of the United flights. The other factor in Japan, people keep asking why we're going down in Japan. The yen last year was 115 yen to the dollar. So that means every Japanese that comes here, their money is it's like a 15% increase in the price just because of currency exchange, because it's about 100 yen to the dollar would be even. So and then you top that with all the competition out of Japan. Japan has become such a popular inbound destination. People from around the world, especially Southeast Asia, are flocking to Japan, and there's a lot of cheap, low-cost carriers flying into Japan, which means there's a lot of service out of Japan. So you can fly from, Tokyo to Taiwan for $100, actually, and then now we have low-cost carriers flying out of Japan. Usually they were just flying short haul to like Korea or Taiwan, but now we have long haul, low-cost carriers such as Scoot and AirAsia X flying to Hawaii. You can get to Hawaii for about $200-300, and it's just too hard for everyone wants to beat up on United, but they're based here on Guam, meaning they're paying U.S. wages, they're paying the high fuel costs, so our pricing is a bit high in the market. So that being said, I just the fear is it's easy. We'll tax the tourists, we'll raise that hot tax 2%. It's not going to affect anything, but our hotel rates have gone up. Our airlines are expensive. Now we're going to add another 2% to that user. So I just fear. So maybe obviously we're here to support and all that, but I just kind of fear. Just the easy answer is just to raise that, but maybe with the sunset provision or other considerations, if some of that money could go back into the product, because that's the other thing we're seeing is other destinations have really been investing into their tourism product, seeing how valuable it is, all the other tax revenues and jobs it brings. So, we're always in here asking for more money for improving our tourism product so we can be competitive and keep those tourists coming in. So, yeah, I think as everyone was saying, we're here to talk about ideas, and I'm not going to say that we absolutely shouldn't do it. I just fear that we're getting known as an expensive destination, then we're going to add more taxes to that. But if that's something that needs to be considered, I'll talk to my board and our members and see how they what their response is to it. But as far as just the general outlook of tourism, I think so I brought this chart just last year we were having another fantastic year. 2017 was great. Then in August, after the news, we were still able to have a good August because it came in the middle of the month. We were only minus 0.5% down. But then, September, October, November, 12.4, 7.4. We recovered some in November, December. But what's really happening is that, Korea is really backfilling the losses in Japan. But we don't want to over-diversify and get too many Koreans and lose that Japanese market, because once it goes away, how can we can't afford to have it go away. Other things I would say is easy to raise the hot tax. So those people that are already paying the hotels that are collecting it, or those people that are collecting it will pay more. But have brought up several times at the bureau that there's a lot of either through the vacation rental market or some of the the Korean guest houses that if they're not paying the hot now, why don't we collect that money instead of raising the hot for the people that are already paying so they pay more. So we've been dialoguing with Rev and Tax to see how we can support them in getting that done. So I would say let's think of ways to collect the money that's already there and then see how that affects things.
Do you have any idea how much you're losing in non-collected hot?
Everything is reported, but you're talking about receivables, right? Unreported?
Yes.
Oh, I don't know. I don't have that data right now.
Do you guys have an estimate of how much you think they should be collecting that hasn't been collected?
Yeah, it's really hard to track, but I'm sure it's at least a couple $1 million, right?
Okay.
Oh, that's why we were basically looking at the Airbnb, trying to get that MOU going, so that hopefully that would close the gap on those things.
That's 3 years now. We've been talking since Tina was here.
I know, but I know they passed that, but we started communicating with Airbnb about November last year, October, November, to try and get an MOU. 17. Yeah, it's just a matter of getting somebody to work with us. So we're still reviewing it right now. So.
Yeah, I just wanted to ask if we could get maybe a summary from Department of Revenue and Tax after this meeting as to what is the status of, so the additional revenue that was given to the department was on, kind of on the promise that they were going to be able to collect more, or some of the things that you've brought up today, but I'm just wondering if there are more that you could report on and that we could see some hope in, or is that some, I kind of want to know what the numbers you are estimating to collect and from what sources. Different than, of course, what you did last year, like the uncollected.
Are you talking about giving us the additional personnel, 30 personnel to?
Yes.
Actually, we're in the process of getting those rated because we started those things.
Wasn't that something that during the budget we said was going to get done within like 90 days or something? We had a very strict timeline of when the personnel would be hired so that we could see the revenue again at a certain timeline. So you're saying that's not, so I guess could we just get a report on the status of that? Like, yeah, how much longer? So we've received no additional from the additional appropriations. They haven't been hired.
Well, yeah, I guess it has to go to the process. From what I'm hearing right now, I think they're in a rating period, I heard. So as soon as we get those, yes.
Okay.
Yeah, we pick up some temporary, but the one for the classified position that we were given, the 30 position, that has to go through the process, so it's taking a while, so.
All right.
But
so maybe, because there was also another hearing where they said, I don't think you were here, John, but where the Director of Department of Administration said, we're hoping for increased collections from DRT. They were not expected collections, so they were in addition to the revenue that we were expecting, and that money was going to go towards UOG, that type of thing. So I'd just like to see, yeah, so since the last, budget compared to this year, yeah, what additional items are you looking at? So if we looked at the Airbnb and the other items that you talked about today, and then the ones that we talked about during the budget that you were going to be able to accomplish with the additional employees?
Yes, first is that we do continue to aggressively, collect taxes, and that's every year that we go through.
No, I know those.
But just basically, we do have reports that talks about our aggressive collections on the accounts receivable. We do have reports that talk about our projects on the military buildup, how many people we actually identified basically and communicated and brought in the additional revenues. We do continue those. We do continue to go out and walk the streets to basically look at the businesses. Do they have a business license? Are they reporting GRT? Are they reporting income tax? Those projects are ongoing. So it's just to mention a few. Sometimes it takes a while, but the other day a taxpayer came in and paid $2 million. A receivable has been there for a long time, and I applaud my collection people for getting that through. $2 million, one taxpayer. So those things come in and out. But
yes,
the important part is we do every day, and even up till now, our people stay at least 2 hours a night, Monday to Thursday, working on those things. So those are the things that we're looking at.
No, we're all grateful for that. I'm just trying to see if there's any, when we talk about legislation that we can do right now, perhaps if the issue is there's a program that you're trying to pursue for the increased collections, right? That was not already in place, or, for example, the Airbnb that you mentioned today, or the use tax, those types of things. If we could see what is delaying those extra measures that you had thought about, or then maybe that's where the legislation could come in, to expedite somehow or remove some kind of, something that's slowing it down. I don't know, because...
Yes, thank you, Senator. I'd just like to add, please, that, I know that the priority, of course, is public safety or the hospital, and education as far as the recruitment process. But I'd like to add that we did hire some that was on that list. I believe we hired 2 tax investigators, and they're working on the rest. They already opened it, closed it, the rating, we're at the rating stage, and then interview and then hire. So I'm looking at possibly another 2 weeks before we increase our staff. But thank you for asking about that, and as John mentioned, yes, we are still working on
Okay,
revenues.
well, maybe if you could just tie it in then to the increased staff was given with the projection of a certain increase in collection over what you normally collect or what you had predicted for 2017. We didn't put those collections into the estimate.
Well, right. We continue to our revenue enhancement projects, but you're right. Once those employees come in, we can do so much more, and we are working on it with Department of Administration. Thank you.
Why don't I know Lester wanted to hear from my OFP, so why don't I have Ricky do a report on some of the things that we were looking at as possible revenue sources.
Yeah, thanks, Speaker. Yeah, Speaker tasked us to look at certain funds and what the impact is if we had raised certain things, percentages. And so the first one that was talked about was the hotel occupancy excise tax. We took a look at the numbers, and it looks like, whether the decision is made, he wants the best available information. So we look at current collections. We took an average, but every percent increase, we're looking at about $3.5 million each percent annually. So if that policy is enacted, that would essentially be an immediate cash flow impact that would assist this year. The impacts to tourism and things like that, that's not something that we took a look at, but certainly through this process we could probably see how that would impact and give better information for the policymakers to make a decision. Another one that was brought up was business privilege taxes, and it's pretty well known that every 0.25% increase would yield about $15 million. So 15 million. So using round numbers, so a 1% increase would yield you about 60 million. Each 0.25 is 15 million. So 1% is 60. Yeah. He also asked us to take a look at the real property taxes. So real property taxes, there's 2 taxes. There's one tax on land. It's 7/72%. It's 0.09% on land, and then the improvements are just permanent structures, buildings. That tax is 7/18%. And so we took a look at some information from NCSL, National Conference of State Legislatures, and we're unable, because we don't have the tax rolls, property tax rolls aggregated, and we don't know how much is actually taxable. So what we used was debt abstract from GITA that calculated the debt ceiling, which includes the total assessed value of property, land, and improvements. So we use that as a basis. We weren't able to calculate mean effective property tax rate, which is what is normally used in the states. The lowest mean effective property tax rate is 0.28 in Hawaii. The highest one is in New Jersey, 2.36%. Using our numbers, we were looking at ours is probably around, without adequate data, the range is like 0.2 to 0.3. But we're not sure until we have some data that could get us to a really solid number. So the scenario we were looking at for real property taxes were, Speaker had asked us to look at the improvement side of the tax. And so that improvement side, we looked at what if we raised that improvement side so that those, I guess, his wanting is don't impact the ones with land without improvements on it. And so we looked at that, a 50% increase in the improvement portion of the real property tax would yield around 8 to 10 million. And then obviously if you double it, that would get you almost 20 million. And so if we get better data, we could probably really hone in on what that would actually collect. This assumes, and this is all based on current collections. So we currently collect about, I think, 27 to 30 million in property taxes. And so assuming that if it was increased, we haven't really considered receivables and things not being collected. With that, in comparing mean effective property tax rates, we won't be able to do that. I said it's probably a range of 0.2 to 0.30. Adding this 50% or 100%, we can't really calculate what the mean effective tax rate is until we get some property tax data rolls to really get that to show from a policy, for the policymakers to see, is this increase of 50% or 100% something that gets us to above Hawaii, because the median is 1% across the U.S. And right now, if we're at anywhere between 0.20 and 0.30, we're obviously that's a bit low. He also took a look at the Organic Act tax, which is that surcharge that was brought up earlier. When we read the Organic Act, it said that it's a 10% tax on all taxpayers on their tax obligation. So it's not on their income, it's not on their taxable income, it's not on their AGI, it's on their taxable income. And so if we take a look at the impact of tax reform on our individual and corporate, and you subtract the refunds, we just applied a 10% tax if that's what's wanted. You just apply the percent to tax collections. I know that would give you a more conservative amount, because tax collections, obviously, that's not all that's collected. But if we're looking at our collections of income taxes, individual and corporate, at being around 367 million net of refunds to 400 million, you're looking at, if you apply 10% on that, it would be around 30 to 40 million. So that's obviously that has been untested. It's not something that has been done before. We tried taking a look at where that language came from when the drafters of the Organic Act were around. We found that taxing the federal tax obligation was something that was done in Vermont, Rhode Island, but that was repealed and converted into a tax on taxable income back in 2001. So, but that's what he asked us to look at and give him some information on the impacts of those. So, give him better information on decisions that may need to be made.
May I comment?
I
It was in 1977 that Congress made that amendment to the Organic Act, because I looked at that. One of the cons on that is, with the passage of the Trump tax, that's to attract more businesses. With Guam having a surcharge now on that, it would make Guam non-competitive for attracting new businesses, because why should they come to Guam when the tax rate is higher compared to going back to the States? So that's just just food for thought, and it does say up to 10%. So maybe consideration again, maybe something smaller. But anyway, it would make Guam non-competitive. Gita would have to think about that from a attracting businesses perspective. So again, just so you know, regarding the real property tax, we've started our audit. Our last audit showed us that Guam was, I think, third from the lowest, if not the lowest. I can't remember offhand, but based on the information that we got already, it's the two largest exemptions for foregone revenues is the primary home exemption and the senior citizens, and that alone takes away $4 million. In addition, what also it does, it freezes the value. It freezes the value of the home. So a home with improvements never gets taxed because of the homeowner's exemption. Again, whatever menu we select, whatever pill we take, it's going to be bitter.
DRT just provided the Speaker and OFB a range of options with regard to the surcharge.
The
real
surcharge
property tax.
basically is when we see it, it's up to 10% of the total tax that's reported, basically. So what basically I did in the surcharge is basically look at the 2016 total tax reported by individuals, corporations, and I think the other one was the estate. So I think it came down to $355 million. So we showed a 1% increase based on that total tax reported. And you're basically saying 35 to 40%. We don't know what the figure will be in the future, so that's a good range that we're looking at. And for the GRT, we basically, when based on percentage, we used the 2017, I believe, is the latest one that 17 or 16? I think 17, yes, the recent one that we used. And we went based on best percentage, and then once we want to achieve that percentage, we can find the rate, basically.
Thank you. I'm glad we have each one. You're talking about the graduated, and so we'll provide you. They're running copies for everybody. It's 4 o'clock, and but I'm trying to figure out it when there's another day that we can get back together. We need to do this real soon. Yes. I mean, really seriously. I mean, like within a week. Think about all the stuff that we've talked about today, and we need some help on some of the white papers. Just whatever you think needs to be done, tell us and give us the justification for it, so that we can get the legislation introduced. And your recommendation for the two, justify it and send it to us, and I'll circulate it to all the senators so that they understand that this is what we're talking about, and we're 1 or 2 or how that's split, but we have to find 47 for this year. I mean, and we're not even starting to think about trying to figure out how we're going to.
Speaker, could I just also ask one more question? DOA had said in the news, but that something about hiring freeze, and then BBMR talked today about hours cut and pay cut, and but all we've seen writing really are the circulars where each agency will be stopped from spending 10% of what they've been appropriated. So I guess I just wanted to ask, what are you actually going to do to achieve the 10%? Are these items on the table for DOA or BBMR? This hiring freeze, and I guess I wanted to know who's going to be affected by that. So what happens with the cycle that you're in the middle of?
Absent any, my suggestion, Mr. Speaker, is that we recess this meeting and reconvene so we don't have to go through the public hearing and notification process. Reconvene in a week, get the information that you're looking for to assist you in being able to discuss the options. But, Madam Vice Speaker, if there are no solutions, and I agree with the public auditor that there should be a menu of items. There are a number of things that we're discussing. Absent any movement, we are going to have to, withhold the allotments, and we are going to have to, if that means that personnel are affected, and then it is what it is.
I understand that all options are on the table, but what is being implemented today? The 10% cut or reserve that's being implemented according to the circulars? Allotments, yeah. Yes. And what about then?
Well, the 10% that I have on reserve is for cash allotments. BBMR is going through their own exercise, having each of the departments and agencies identify based on their calculated reduction per agency, because theirs is not across the board. Cash-wise, we did an exercise within DOA We provided today what the estimated cash reduction was going to be till the end of the fiscal year, and then we worked with each of the departments or agencies that were receiving allotments to expect a 10% reduction. Absent any revenue enhancements, that is the harsh reality we're going to face, and it will affect, hiring. We've been told for now that health, safety, or law enforcement is not to be affected. So those that are in effect, for example, the fire department, that cycle is going through. We're working on customs right now. We know that GPD needs people. We know that DOC needs people, but at this point, we're kind of waiting to see what is the policy call. What are we going to do? Absent any action to increase revenue, we will have no other choice. There's talks about a reduction in force or 10% across the board or a 32-hour work week. That will not be able to happen this fiscal year per the law. 4GCA has prescribed a method for implementing that, and that's not something we're going to be able to do by September even, I believe.
All right. And so, Lester, just to confirm, the circulars that have been sent, according to Christine, these are not across the board 10% cuts to every agency, only select agencies, and some have been exempted?
No, it's weighted based upon your pro rata share of the general fund. So if the general fund is $300 million and you're the judiciary and you get $30 million, and you're 10%.
Okay.
Yeah.
All right. And so, but this is not a proposal. This is being implemented. Is that correct?
What we did was we wanted not to be heavy-handed. We wanted to be able to, and again, for the education of everybody here, particularly the public, there are some measures that could be implemented to achieve the cost reduction, and there are suggestions that have been proffered, such as land management, increasing the fees for the land survey revolving fund so that they would wean themselves off the general fund. I was very appreciative of suggestions like that on a fee-based basis so that we could take the portion that is attributed to that operation and not have it count against the general fund. So, but most of the agencies, I mean, DOA, case in point, they're critical to the operations of the government. They do the payroll, they do the audits, they do, I mean, a myriad of things. Their pro rata share was about $900,000, and Christine was very honest with me, and she said, I think I can only, like, $500,000. So there's $400,000 that, their share, we all things being equal, she cannot absorb. Similar with the fire and police.
No, my only question is, it says in the letters or in the circulars, what are these? That your respective entity's pro rata reduction to its GF appropriation level is as follows. So,
yeah.
So they're reduced per this memo, or you're still contemplating that?
They're supposed to identify how to take their pro rata share and absorb it or not absorb it. And so we got some responses back. As I mentioned earlier, I didn't get a response from this body, nor did I get one from the judiciary, and nor did I get one from DOE. So it's very difficult, particularly on how big a share DOE is, to unilaterally say, okay, we're going to do this to you, absent any input from Mr. Fernandez and the board. So, I mean, the table is, the options are still open for discussion on how to address this. But in the meantime, at least they have an understanding of how it will affect their agency and what they need to do.
All right. So does DOA then use these circulars and
So what BBMR is doing is on a budget basis and trying to ascertain.
They're saying on the appropriate. No, they're saying that well, the letter says something different than what he's saying in person. That the letter says their appropriation will be reduced by this amount, and then you said you would reduce cash allotments, of course, by
10%.
10%.
Yeah. We're just holding that in reserve because we don't know the effect. And
so do you use these circulars for any part of your distribution of the cash?
No, budget is different from cash. So like we had talked about, even in consideration of Section 30, they're using a different amount than we are because we use that cash in September. That budgeted amount actually gets put into 19. I use it as cash. So it's very different.
I just want to make sure.
Yeah,
so you're reducing the cash by 10%?
Correct.
Across the board?
Yes.
All right.
Yes. So that we can, and basically what I've told them is, because theoretically, with the more money in people's pockets, businesses having more money available to them, they're going to reinvest in the economy through, higher purchases or expansion. We can't quantify what that's going to mean in terms of cash to the government. And so my role is to prepare the departments and agencies that receive cash from us for the worst case scenario and hope for the best. If the cash position doesn't come to pass where it's such a deep reduction in our cash receipts on a month-to-month basis, then we'll adjust accordingly. And then come September, depending on what happens with respect to the Section 30, then we can adjust as well. But we always have to manage whatever cash that we receive on a monthly basis. We have to factor in that 147 until the reimbursements coming from ACTC has to be paid out in tax refunds. So the cash available for the operations of the government is minimized by that. So that's what we're so very, very different from the budget side.
All right, I just wanted to confirm. Yeah. All right, thank you. And we understand that today is your last day at
Yes.
Department of Administration, and
Yes.
I just wanted to say that on the record, and thank you for your work there.
Thank you.
And so how do you expect things to go when you leave?
Huh?
Yeah,
I spent most of today with my staff coming
Yes.
in begging me not to go. Well, I mean, and that's why it's been a really crazy week. I've had back-to-back meetings with the department heads or the agency heads. We've laid out the plan, the cash plan for the rest of the year. My staff are aware of that. We have a cash team. Our deputy is aware, and we've also briefed the incoming director of administration so that he's aware. It's going to be tight, and the burden falls on that cash team to make sure that we don't allow things to go beyond us, because if we allow cash to be released more than what we have, then obviously we're going to get into a bad situation. So hopefully everything stays in place and it's much rosier than we expect for the year.
I neglected to get some input from our one economist.
According to the GDP numbers, every year since 2006, the economy has expanded, at least in monetary terms. We don't know about 2017 yet, but in 2017, the total revenue did go up in the preliminary estimates a little bit. The expectation is that there will be a continued growth trend in 2019. There's several main reasons for that. There's a positive global economic outlook according to the International Monetary Fund. There's a cyclical upswing underway since mid-2016 to strengthen. Of 120 economies accounting for 3/4 of the world GDP have seen a pickup in growth on the year-on-year basis in 2017. Economies for Korea are Korea's expecting a 3% expansion in 2018, and their per capita income their $30,000, their per capita income will reach $32,000 by the end of 2018, which, based on the current exchange rate, will bring the country above the $30,000 threshold, regarded as a marketing ascension to a developed country. And that's important because they're one of the largest tourist markets. In terms of tourism, GVB already mentioned this, but 2017 set all-time record highs, primarily because of the increase in tourism from Korea. Japan was impacted a lot because of the threats from North Korea and the rhetoric surrounding that, and a lot of news coverage. My experience has been over 30 years. When there's been a crisis and a dip in tourism, generally over time it rebounds. So I'm hopeful and that the increase in Korean tourists, based on the outlook internationally, will continue to have a larger share of tourists, and at the same time the Japan market will rebound somewhat. In addition to the numbers, the trend in we're looking at from a revenue standpoint, the tourists are contributing more revenue based on increased hotel occupancy rates and increased occupancy and higher room rates. That's been a continuing trend. So that's contributed more to expansion than the actual numbers. The longer term, the U.S. Department of Commerce projects increase the world region to increase 40% in tourist arrivals by 2021. Relatively flat for Japan, but major expansion for Korea. South Korea is expected to increase 43% from 2015 to 2021. Another significant sector of the economy is construction. It accounts for 9% of the economy in terms of civilian employment, and it's a good leading indicator of the economy because as the projects are finished, like hotels, that will generate additional retail and hotel and other employment. The building permits are very strong this year, one of the highest historically for projects outside the base, and also for projects on the base. There's been a number of new contracts led. So the total construction activity is likely to increase. Also, there's an increasing backlog of projects that have been contracted, that there's work in progress. So nearly $500 million. And we've gotten improved information because we're getting a list of the projects and the percent completed on the federal projects, the DoD projects, so we can track how much work is remaining, and that's expanded. So the work is there, and in the past couple of years it's been constrained by the reduction in H-2 workers, so the labor force has declined, and based on the National Defense Authorization Act, we expect that there'll be relief, and that some of that will there'll be increased number of H-2 workers from almost zero now. That will take some time, so that will provide a little bit of relief, but not too much in 2018. But by 2019 fiscal year, we expect I expect construction, which has fallen from the peak of about 7,000. The first decline was more related to projects being completed, but in the last year or so, it's dropped to about 5,500 from a recent historical peak of about 7,000. So I expect by 2019 we should be getting hundreds, if not 1,000 or two more in the construction industry. There's a number of major projects ongoing. Subaki Hotel, low-income housing, Summer Towers, formerly known as Emerald Ocean View Park. And one thing I found particularly surprising is they just put those on the market, and all of the, according to their website, everything in Tower 1 has been leased, rented. That's a good indicator. Tuman Bay Ball is still under construction, Fisherman's Co-op, and the biggest government project is the airport expansion project, the third floor. That's underway. So building permits, including DoD contracts, increase from $385 million in 2015 to $459 million in 2016, and the latest through the end of the fiscal year, $590 million in 2017. Some of this will stretch out over the future because some of the projects contracted in 2017, the work won't even begin until 2020. but expect increased construction. Marine Corps relocation is well underway. According to the Interagency Coordination Group of Inspectors General, which is required to do an annual report, through fiscal year 2016, they've already committed $1.1 billion, with $517 million in costs already incurred for a number of projects, including some of the bridges. In terms of the labor relief, the H2 workers can work on base projects or projects related to that in the civilian community. Fiscal policy regarding the Trump budget. Trump's fiscal year 2018 budget calls for a number of cuts in civilian programs, but increases defense spending for the nation. There's a whole laundry list of cuts but the budget hasn't been passed yet, so we don't know for the civilian sector how much the cuts will occur that are proposed, but we do know that the Defense Department's budget has been passed, and it's very likely that the total expenditures in the economy from the federal government will increase because the defense increases may offset the civilian decreases, but the effects will be felt differently. We'll get increases from the DOD in terms of some tax revenue and employment, but specific programs like labor, public health, food stamps might be cut, so different people will be affected. In terms of the tax cuts don't directly affect the total amount of money that's flowing into Guam. It will change the distribution within the economy, so everything that the tax individual and corporate taxpayers don't pay, that doesn't change the amount of money on Guam directly, but everything that the savings to them is a cut to the government of Guam. So while they may have more money to spend, the cuts will come to the government of Guam. So my view is it directly doesn't change the net size of the economy, but the distribution. Some of that may get adjusted by increasing taxes, which will change the distribution. However, because of the tax cuts, that will apply to the Defense Department employees on Guam as well. There will be a net revenue decrease because of the reduction in Section 30. Also, the cuts will save corporations money. That's estimated to be in the neighborhood of $50 million. They may not spend or reinvest all of that money immediately. And the talk in the U.S. is that a lot of them are spending the corporate savings on buying back stock and other things. So some of it will probably get reinvested, but it's likely that will be a net reduction in the economy. That's the gist of it. The full report, 9 pages, will be included in the executive branch budget to the legislature.
Week to get the information that you have requested from not only from DRT, but also from us on the pros and cons of some of these things we talked about. I can get back to making sure that everything's bound and make arrangements with your staff to deliver the budget.
All right, so
Wait, I just wanted to make sure, so BBMR is going to provide a list of the options we've discussed and the pros and cons, so we can have a menu of options to consider which one to.
hopefully in some more short term than long term, so that we can address 18 immediately.
I think the one thing that was asked of me specifically was the 2%, because I think we're all in agreement that there needs to be something done soon, and there was some allocation of that 2% that was discussed here, with DOE getting something, and the hospital, and then the government. So We'll put that information together, the information from Rev and Tax on the sales tax and that other information. And I think that OFB, thank you very much. I think that the 4 items that you covered, the hotel occupancy tax, the BPT, the real property tax, and the surcharge are already something that your committee has some substantiation or at least a very good idea of. So I think collectively, and again, the public auditor, with her comments already about like one pool, and then she didn't say anything, but she did talk to me about the taboo subject of COLA, but she did discuss that with me. So there are certain things that I guess people just don't like to talk about, but it should be on the table. All things being fair.
I can add one thing on the sales tax. When Senator Pangilinan was the chair of the Budget Committee, they enacted what's called a visible GRT, which looked like a sales tax. Some merchants had the authority, and some merchants on Guam were adding that. It was very unpopular, and virtually everybody has stopped that.
I understand there's still some people that are doing it, but let's recess because these two have to get us something by midnight, or my staff. So I'll just recess, and I'll call everybody as soon as I find a 2-hour slot that we can fit everybody in. All right? All right. Thank you.